Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-magdi.com. For all trades, we'll use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation nor an offer to buy or sell any financial instrument. It is primarily for the TSTW24, TSTWSY S08, and TSTWSY S008 traders. Today is the 17th of March 2012, and a happy St. Patrick's Day to you all. Lovely Irish people, okay? If you like Irish dancing, if you like Irish people, okay? If you want to know more about Irish, festival, this is St. Patrick's Day, today, 17th of March. You can go to www.google.com, type in St. Patrick's Day to read more about this, special day for the Irish people, okay? So happy St. Patrick's Day to you all, okay? Lovely people, okay? The title of this video is Perfect Trading Style, okay? What is a perfect trading style, okay? How one can develop, okay, a perfect trading style, okay? So before we start with the subject of a perfect, trading style, okay, we will go to a few things, so bear with us as we are, paying attention to, those important subjects. We will look at first at the USD yen currency pair, the USD CAD currency pair, okay. We will also look at the silver, silver futures, and also the S&P 500, okay. So bear with us as we are looking at the S&P 500, okay, the silver, and also USD CAD, USD yen. This will be our first discussion before the main topic about a perfect trading style, okay? So let's get started. Last weekend we were talking about silver smart trading, okay? So we hope you have enjoyed that video titled Silver Smart Trading. If you have not watched it, you may go to www.youtube.com, okay, and watch the video that we titled Silver Smart Trading, okay. This will allow you to understand what we are about to talk about, okay. Alright, so the first candidate, okay, is the USD yen currency pair. And last weekend we were telling you, we were here, you see the high of the week before last week, it was the yellow line here. We were somewhere here, okay. So this week that has ended is the beginning of that week is this green vertical line on the 12th of March 2012, okay. So this is the beginning of the week that has gone, okay. So we were telling you that we were expecting the USD yen to give a kind of a healthy pullback, though the pair is bullish. We were expecting, okay, a kind of a healthy pullback, okay. But during the night of Sunday on the 11th of March 2012, you see that some traders start selling the USD yen, okay, and then London did open somewhere here, and the price was almost consolidating, and the whole day of Monday was a kind of consolidation. It went up a bit, but not much. This is a Monday, okay, the 12th of March, okay, 2012, okay. So we were telling traders to be cautiously bullish, but to expect a kind of a healthy pullback. So I was telling traders to be very careful, because this currency pair was going up, okay, for some time, more than 5 weeks. So I was giving warning to traders to be very careful, that we were expecting a kind of pullback, okay. So we see a bit of blah 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 on Monday. Come Tuesday, which was on the 13th of March, the Fed came out, okay. The Federal Reserve came out, and the big news was Wall Street passes crucial stress test, okay. It was all the blah blah blah. The Federal Reserve, okay, paved the way for a multi-billion-dollar dividend bonanza, okay, by passing 15 banks in its latest stress test, allowing them to return cash to shareholders. You can bet on it because this is the election year. The Fed is not stupid, okay, as I explained to you before. The politician and market participant, we must go into their mind to understand what they are trying to do. So the Fed has done the stress test, and 15 banks okay, have passed the test, allowing these banks, okay, to return dividend cash to shareholders, so to make the population very happy. So the bank will return cash, because you have to understand the financial crisis has begun with the banks. So the elections coming, the bank will return some cash, okay, to the shareholders, so they can forget it, all the messy, okay, period that we went through, okay. So it has been the Fed came. It's supposed to come out. The Fed supposed to speak on Thursday, but on Tuesday, the Fed came out and started speaking. It discouraged a long-term bear that was selling the US yen, maintaining that there will be no QE3, okay, no more money printing this year. You can bet on it, okay, ladies and gentlemen, because you have to understand that from 2008, this currency pair was in a downtrend. You can see here, almost 2010, you can see it was down non-stop, okay. For 2 years, this currency pair was going down non-stop. You have to understand that this is election year. The Fed will prefer this currency pair to return back to where it started from, somewhere here. So we will expect this currency pair to go up, okay. So this was happening because we don't want a lot of questions, okay, being put to the president about why the dollar went down too much. So the Fed cannot, okay, print more money this election year. So he discouraged long-term, okay, bear. So we see a lot of bear closing their position, and when the bear are closing their position, you can see that the price will just go up non-stop. That's what we have seen this week. Instead of having an orderly pullback before the price continue the movement to the upside, because these long-term bears, they were discouraged by the speech of the Fed. The Fed said that there will be no QE3, so this bear has to close their position. Therefore, the price continue to go up without any pullback. Okay, so there are only 3 banks, okay, that have failed, okay, the stress test. Okay, you can go to www.google.com, type in stress test, and you understand what this is about. Okay, so only 3 banks has failed the test: Citibank, Ally Financial, and Sam Trust. Okay, all 3 have failed the test, the stress test, but 15 banks, okay, successfully passed the test. Okay, so you have to understand that the politician this year, election year, they will not allow the dollar to go down as it was for 2 years. They will prefer the dollar to return to its fair value somewhere up here. Okay, so this speech has allowed long-term bear to close their bearish position, so the price continue the movement to the upside. If you go quickly to the hourly chart, you understand exactly what has happened. The previous high of the week before last week is this yellow horizontal line. As I told you, Monday was consolidation, and then quickly the price returned back above the previous high. This is bullish. Okay, you have to draw the line, the previous high and the previous low. Price returned back above the previous high is bullish. Price returned back to the previous high, you break above it and retest it and turn around, continue the movement to the upside after the speech of the Fed. Or this is on Tuesday, as you can see this session here. This is a Tuesday session here where I'm rotating my cursor after the Fed speech, telling them that the economy is quite is recovering very well. Okay, so do not expect QE3. So do not sell the dollar. That is why he's telling them do not sell the dollar, and the bank will return cash to shareholders, which means the financial crisis is diminishing big time. Next day, the long-term bear closed their position. You can see more movements here, and then that was after. Okay, you can see here on Thursday they start selling. This is the day normally they start to speak. They start selling now. You can see if you draw a trend line on this hourly chart, you can see that the hourly chart trend line here on the hourly chart of the USD yen is broken on the hourly chart. Okay, if you draw your trend line like this from this side here, okay, you can see that Okay, we are above it, but the common sense trend line here, this one here, is broken, and price staggering in this session. We have a lower high. Can you see a high and a lower high on the hourly chart? Okay, in fact, it's a triangle in this session here on the hourly chart. You see the top here declining up. This is a bearish triangle. Okay, we will expect it to break below it or test it before coming down. As I explained to you, we are expecting a healthy pullback in this USD yen. We will see whether the market will allow that, but the speech of the Fed has allowed the USD yen to continue the movement to the upside, as long-term bears were forced to close their position because there will be no QE trade. Okay, so we will see next week. Okay, going to the weekly chart whether traders will respond and also take some profit. Okay, it's bullish, but we expect a kind of healthy pullback before the market continue the movement to the upside. Another thing you need to see on the hourly chart, you can see that on the hourly chart the previous high was the yellow line here. When the price was going down, you see on the Monday, you can see it was going down and retest the previous high here. So it went down to retest the previous high, this one here, before zooming up and breaking above the previous high here, retesting here, and continue the movement to the upside. This is about following the price, the number one indicator, without cutting corner. Price break above the previous high here, this one, went far away, come back, retest it, break above this one here, come back, retest it, above it, you see here. Alright, it now is retesting, this zone here. We will watch it draw your trend line, and follow the price without guessing it. If the music has changed, the dance must change. This currency pair is bullish, but we are expecting a kind of a healthy pullback, orderly, healthy pullback. You can see on my weekly chart, the yellow trend line, which is a long-term trend line, has been broken. We're expecting the price to retest this level, or at least this one here. You can go back and watch the silver, smart trading, to understand more about this currency pair. The next candidate is the USD CAD, which is the dollar, Canadian dollar currency pair, the USD CAD. Our psychological price level is 9929. This has been a poor performer. This currency pair has been very sluggish, so to speak, very poor performer, and it couldn't hold above the level of 9929, the psychological price level. I say to USD CAD, shame on to you, this currency pair. So this is what has happened. It couldn't. Then I will go back again to the hourly chart, and then you will see clearly what I'm talking about here. The level we are watching is this level here, somewhere here, 9929, the psychological price level for this a USD CAD currency pair. And he failed to remain above the psychological price level, this red horizontal line in the zone of 9929. You can see if I show you from the 12, the 12 is this section from here. I will draw a vertical line there so you can see clearly what I'm talking about here. Alright, this I'll call it this vertical, white vertical line, that's the beginning of the week. You can see we went above the 9929 only to crash below it. Now we went above it here, we crashed below it. So in fact it was a consolidation. If you draw your lines on the hourly chart, you will see clearly that the price, it was in fact consolidating between the two levels here. You see here this level, this horizontal line here, you can see, and the top one here, it's all blah 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 blah. For the USD CAD, couldn't hold above this psychological red line here, 9929. If you go back again to the 4-hour chart, you may go back again and watch the video that we titled Silver Smart Trading, and you can understand more about this currency pair. Alright, but I want you to pay attention to this trend line on the 4-hour chart. You can see that this trend line here, they want this one here. I will color in a different color so you can see it clearly. Well, you can understand exactly what I'm talking about. I'll color in yellow, this yellow trend line. You can see that the price, you can see on the 4-hour chart, the price was here, and then it came back to touch it here. So with these 2 points on our 4-hour chart, we can draw it. See here, alright, the price came back to retest it here, okay, to retest it here. There's a high channel, we may come back again and retest it here. So pay attention to this trend line, this yellow trend line on the 4-hour chart of the USD CAD. In my view, this currency pair is still bullish. As you can see, this yellow trend line is still a bullish trend line. We are still above this bullish trend line, but we will prefer to be above the psychological price level, the 9929. Another thing you have to understand, okay, when we are talking about this USD CAD, anytime you are trading this currency pair, you must pay attention to crude oil, as I explained to you in the previous video. Okay, so you can go and watch that video again. Crude oil is influencing this currency pair. Another thing also you need to remember is that traders that are buying the USD yen, traders that are bullish, okay, towards the USD yen, are using the USD CAD, okay, for hedging activity. So when they buy the USD yen, they are selling the USD CAD to protect their position. This is a hedging activity taking place in the USD CAD. Therefore, instead of going up, it's going down, and the USD yen is going up. We will see when the USD yen start going down, whether trader will use the same strategy by buying the USD CAD when they are selling the USD yen to protect their position. That remains to be seen. But the key point that you have to remember is the 9929 psychological price level. We will prefer to buy above that level, but we will pay attention also we will pay attention to this yellow, okay, a trend line on the 4-hour chart of the USD CAD or currency pair, trading on the edge like professional traders using our tool TSCW24, TSCWSY S08, and the TSCWSY S008 trading system. Next candidate is the S&P, okay, 500. Okay, I'll try to go fast. The title of this video is Perfect Trading Style, but before this main topic, we will go through this blah blah blah. Okay, so bear with us. S&P 500, okay. As explained to trader, I still have my line on this chart. I'm speaking a bit fast because I don't want the video to be too long. You can see that, okay, the green line here is, I'll go now to the weekly chart. That's where I draw all this. You can see the yellow trend line. The yellow trend line is the trend line for the weekly chart. The green one is for the monthly chart. You were here when we were drawing all this line. We set all our target. Now we went above our turquoise target, which is the 1370, and we told you that if that level is broken and the price finds support above the 1370, the next target is 1400. Our second target is also hit. This is about following the price itself, the number one indicator, without cutting corner. So this is how you will use all the TSTW trading system, draw your line and trade on the edge. You see this trend line here on the monthly chart. I will color in a different color now, so I will also leave it on my chart intact. Okay, so next time you can see it again. What I will use, okay, I will use the pink again. Okay, as I explained, I put it to trade last time to please the lady. Okay, somebody make a comment last time for one of the videos, so again I'm using the same. Okay, so I use color pink. This pink trend line. We are now at the level. We are the price now at 1404. Our second target is hit. So what do we do, ladies and gentlemen? We will just watch it. If it goes above 1400 and find support above 1400, we will continue the movement to the upside. I will not put any more targets, okay, on this chart at this point in time. I will leave it as it is, okay, and allow traders themselves. Okay, I'll go to the quarterly chart to see what's happening there. So on the quarterly chart, you see, so we can see clearly that we break above one very important level. This is the turquoise trend at 1370. Okay, so the price may try maybe, okay, to come back and retest the 1370. We will see whether you will do that before going up. We will see whether you try to come down a bit near 1370 before going up, or find a resistance right here and turn around and go down. If it's going down, we will sell it. If it's going up, we will buy it, following the price itself, the number one indicator. Okay, all right. But now we are in a bullish zone, as I explained to you before. We are now in the bullish zone. Okay, you see we are in the bullish zone. So priority to bullish signal, but if the price finds a resistance at 1400, we will sell it, okay, bringing it, okay, down to the 1370. If the 1370 fails to hold it, the next target will be the green one. If the green one fails, it will be the yellow one, as I explained to you on the, okay, so we do the reverse now. Okay, if it starts going down, we'll do the reverse. So we will see whether the price will continue moving to the upside. As I explained to you, the politicians are also market participants. This year is the next year. The market will find it very difficult to go down, because market going down is a bad news for the politicians. So be aware of that. So trade like professional traders and go into the mind of the politician too, to know exactly what is likely to take place this year. We will see whether they will allow the market to go down. I doubt it very much, but we will see what will happen. At the end of the day, if there is too much distortion, the market will rectify itself by all means, whether the politicians are in control or not. Okay? So now we hit our target here. If I want to draw another target, it will be far away, a bit too far. I will put it maybe at 150. This is a bit a greedy target. Okay, this level 1500. I can leave it here. What I would do, I leave it white here. That will be a target. If we find a support above, okay, the 1400, try break above it, retest it, turn around, and movement to the upside. But if it's stuck here, which means we find a resistance, we'll do the inverse, turquoise, green and yellow. If it's going up, our next target will be 1500. If you go to the hourly chart, you see clearly that the price did not hide anything. This is a market stable data. You go to the hourly chart, as I explained to you, because a lot of traders get a bit too excited when it comes to day trading. They make it too complicated for themselves. They say they are day traders. They don't want to know what is happening on the monthly chart. They don't want to know what's happening on the quarterly chart. They don't want to know what's happening on the yearly chart. That's why day traders are losing. Okay, and I was explaining to you that in okay, when I continue this video, I explain to you okay why a lot of day traders are losing, because they go on the 5 minute, 10 minute making trading decisions. You have a trading system, you must use it together with the market stable data. Draw your trend line on a higher time frame before going to the okay. Now you see here on the hourly chart for the S&P 500, you see here the price came, we were somewhere here on the 12. You see here, okay, you see this is the beginning of the week where I'm moving my cursor here. You can see the price deep below, okay, it went down fast, okay, and as soon as the Fed came and speak and say that okay, the economy is not too bad, there will be no okay money printing this year, so which means no more intervention, the economy is recovering very well, the market understand that, and they start buying, people start buying more, and the level, okay, the indecision that we have seen, or the consolidation in the zone of 13700, you can see 13700 was a tough resistance to break, because they were expecting okay the speech of the Fed, and the Fed has clarified that the economy is doing very well, do not worry, I won't be printing more money, there's no need to intervene again, so everything is perfectly okay. And you can see the market took it straight away from this level of 1370, okay, and quickly they bring it to the next target at 1400. We'll see whether next week okay the bullish momentum will continue or not, or whether the market will okay start selling it down. Okay, so you can see on the hourly chart it did below that level and return back above it. It's bullish. Okay, why it went below it and return back above it? Okay, it's because this level was rejected okay as a resistance zone, and quickly the price break the previous high. This is the previous high here. Can you see the previous high using the definition of the uptrend? The previous high was broken bullishly, and the price just ran fast. Okay, next target okay 1400. Okay, all right. So now we are now in exactly at this level of 14 okay 04. So the same strategy, be patient. Okay, watch it how the price reacted and follow the price. So here you will, some traders say to me, oh George, you're talking too much about the historical chart. If you do not understand the historical chart, you can't trade live charts. Okay, very important. So you have to understand the language of the price, higher low, higher high. The price is bullish when the previous high is broken. It's just simple. So draw your line, the previous high. So like next week, what do? You draw the previous high here. Okay, draw it. Okay, and watch it. Draw it. Because if you stay above it, it's bullish. If you return below the previous high, using the definition of the uptrend, is bearish. Just use that. You use the previous high and to monitor the price. Okay, but always do not start from the lower time frame. As I explained to you, start from the weekly chart at least. Okay, so this is about the S&P 500. All right. Now the next candidate is silver. Okay, and I was on this chart here on the 4-hour chart. And I draw all this now. I did not remove my line. The smart media line for silver. Okay, talking about the main contract, May 2012 contract. The smart media line is at okay 2917. Okay, 2917. is the smart media line for silver. Okay, if you go quickly to the monthly chart, I think you can see there. That's the you can see that black line here. This is the smart media line for silver, and I was telling you that there is a high chance that this silver may try to come and retest this smart media line, because the price came after the exaggeration in this session. Distortion, price went up. Price on the monthly chart returned back to retest, as I was using the language. Price came back to hug the smart media line, and I was telling you last Saturday that the price has a high chance to come back and retest the smart media line, because the smart media line is the technical fair value of the financial instrument. The market will try to come back and retest the technical fair value. So there is a high chance that this magnetism of the smart media line will pull the price steadily to retest it, or at least to come near it before it may continue the movement to the upside. Also, we are still below this bearish trend line. As I explained to you, this bearish trend line, we are seeing a bearish zone. So priority to sell signal. Also, and I was explaining to traders that trade silver, because some of the traders are using trading silver, and when I draw all this line, the trend line that I was telling you, I draw this one first, this point, and this point. If you haven't watched that video that we titled Silver Smart Trading, you may go back and watch it. There's a point, and this point we have this trend line, and I was telling you that there is a high chance the price may try to come back and retest this trend line here, this one here. You see this one, You try to retest it, If you want to buy on the edge. And I also draw the common sense trend line here. Alright. On Monday, the price break below the common sense trend line. You can see this one. This is the common sense trend line. This channel I draw here. It's a common sense channel. The price quickly break the common sense trend line here. And I was looking for this trend line, the lower one here, on the 4-hour chart of silver, the future market, this is the future market of silver, May contract 2012, So we came to the edge of, if you like, I can, draw it again, and you see clearly, I'm talking about this line here. You can see this one, So the price came, you see, roll it down very, very fast to retest it, and some trader bought it here, but the price couldn't go up because there is another line here. This is about drawing the lines, just draw your lines, This is how you do it slowly, Slowly, no rush, There is another line here. You see this level here? I'll make it a bit thicker for you. Alright? Here. So the price roll it down to retest this trend line here, It's about trading on the edge. Some traders who understand trading on the edge bought it. Price going up. Next resistance level is this one here. So they took profit. They took profit. So there was a bullish trend line and a horizontal trend line. Price returned back below the bearish trend line. It's bearish. You see here. So they took their profit here, and price returned back below the bullish trend line. It couldn't come back. It was trying to come back and retest it, but couldn't. It just hold it down big time. All right. Now we are in a horizontal section here. In my view, this movement to the downside will continue, until we come at least very close to the smart media line in the zone of 2917, but that remains to be seen. We are not trying to predict the price or to forecast the market. We are just following the price itself, the number one indicators, drawing our lines, trading like professional traders without cutting connect. Now on this 4-hour chart, ladies and gentlemen, now we have a kind of consolidation taking place here. You see here, all right. So if you receive a signal to sell on the edge here, you will sell it. You will take your profit at the bottom here. If you break below it, this channel here, we will prefer it to break below it and to come back and retest it before turning around and go down. If it break above this top here, we allow it to come back and retest it and continue the movement to the upside. This is just a simple, Do not forget the median line of this horizontal channel where I'm moving my cursor now. So when the price on Monday, we will prefer the price to come to the edge. If you receive a signal to sell, we will sell it. Our target will be the lower base. Pay attention to the median line. If it crash below it, we will allow it to go down first and come back and retest the edge here and give us again a signal to sell, and then we will sell it down using our trading tool, a professional trader. If it manages to go above it, we allow it to go up past and come back and retest it. That will be in normal condition before giving us a bullish signal following the price self. Okay, the number one indicator without cutting corners. Alright, now moving on very fast because I don't expect this video to be too long, but I've been speaking now for too long. There's another trailer here. Watch it. I'm joining this point here, and this one here. Can you see this point and this point on the 4-hour chart, not on the 1 minute chart, not on the 3 minute chart, not on the 5 minute chart, not on the 50 minute chart, but on the 4-hour chart at least. Okay, this point and this point. There's an edge. You see how it is? Okay, they sold it on the edge. You see? That's why. Okay, you see here? They just sold it on the edge and crashed it down on the edge. This point and this point allow me to draw this trend line and enroll it on the edge. You want to look for opportunity to sell, you receive it here down. Okay, next support level. Now this trend line here, the price now a bit above it. You will see. Okay, it's just above it. It's consolidating here. We will see what's going to happen following the price self, the number one indicator. If you return above, okay, the consolidation session is bullish because this level here, this is the previous low, a lower low. If you return back above the previous low, that's bullish. Come back above here. Just understanding the price, what the price is doing, using a higher time frame, a signal time frame before entry time frame. Ladies and gentlemen, this is how you will trade. Okay, so I've finished my blah blah blah. Now we can move on now to the main topic about okay, a perfect trading style. So let's get started. Thank you, ladies and gentlemen, for putting up with us and watching the first part of the video about the USD yen, the USD CAD, and the S&P 500. Okay, now we will start with the main topic about a perfect trading style. What is a perfect trading style? Okay, and how one can develop a perfect trading style. Okay, we will go through this very fast. I will keep okay, very short, and giving you okay, the key elements of this perfect trading style, and I count on you okay, to learn to master it, and also okay, most importantly okay, to put it into use. Okay, it's a very important video. Okay, in our view, okay, we try to give to traders okay, the education okay, that and the support that they need okay, to move forward and to start enjoying okay, their trade. Okay, a perfect trading style, ladies and gentlemen, is about a 3 steps ladder. Okay, 3 steps ladder. Okay, the ladder of a successful trading. Okay, and these are chronological steps. Okay, and the first steps of the 3 steps ladder. Okay, is the market conditions. Okay, very important. The market conditions. The second steps of the 3 steps ladder is the place. The third step of the 3 steps ladder is the timing. Okay, so whenever you are about to make a trading decision or an investment decision, whether you are swing trading, day trading, position trading, okay, you must follow okay, these steps, the 3 steps okay, for successful trading, a perfect trading style. Okay, where we are talking about market conditions, ladies and gentlemen, this is where you're going to start okay, doing your preparation. The first step, you want to day trade, you want to swing trade, you want to position trade, you want to invest. This is your first steps, is market condition. Okay, this is about okay, the trading a triangle. Are we in a bullish cycle? Okay, are the fundamentals sound? Okay, is the economy doing very well, the global economy? Okay, you want to verify okay, the market condition. Now for day traders, because I know a lot of day traders okay, are watching our videos, Some of you that are following now on Twitter, you will notice that very often, every day when I'm posting, if I'm tweeting, okay, I will talk about Apple stock very often, okay, because it's a market leader. We want to know where the market leaders, okay, are going. They will influence the markets. We want to trade first the market. We want to check the market condition. You will go to www.googlefinance.com. You will go to www.yahoofinance.com, and you will check, okay, whether you are trading any stock. Every stock that you are trading, you will check the market condition, the fundamentals, and the news regarding, okay, that particular stock. This is about a perfect trading style. This is the first step for successful trading. Alright, very, very important. Is the business doing very well? How much debt they have? Short-term debt, long-term debt. Okay, I talked about it before in some of our previous videos. Fundamental analysis, very important. Talking about the trading triangle, the leaders, which is the inside of the trading triangle, the leaders, the news, and the fundamental will always influence the market. We are expecting the market to start a bullish cycle, but before that, we are expecting the market to rectify itself, a kind of pullback, okay, to form a base, AB base, before a new, okay, a 5 Elliott wave. We will check the market condition. The economy in the United States is improving. We are expecting the economy in Canada, in Australia, in China to contract when the economy in the United States, okay, is expanding. And we will expect the Eurozone slowly but gradually, okay, to start moving back into line with the United States, okay. This is about analyzing, okay, the market conditions, checking the market leaders, okay. There are other things that we talk about, okay, the market leaders for the Dow 30, the market leaders for the Nasdaq 100. You can go to www.dayprotrader.com to know those market leaders. You will pay attention to the sector. What do you want to trade? What are the market conditions? Okay, so we knew that recently the financial sector was very bearish, the retail sector was very bearish. Now the sector that were bearish before will start becoming bullish, and the sector that were bullish before will start becoming bearish. The reverse will take place. So you want to check first the market condition. You want to invest, buy a stock and hold. You want to check first the market condition. Know the sectors that are, okay, favorable, which means the market conditions that are favorable. Whether right now traders that want to buy and hold should start buying banks and stock that are listed on the retail sector. These sectors were bearish before. A lot of money by being pumped into the banking sector. This sector start recovering. As soon as the market gives us a clear-cut pullback, we'll start buying the banks and the retail sector. Sectors that were bearish before, traders will start moving money back into those sectors as they are improving. This is about the market condition. Talking about perfect trading style, you will check first the market condition, the sector, before the individual financial instrument that you want to trade. Inside of the trading triangle, ladies and gentlemen, you can go to www.youtube.com/.3o to watch the video about the trading triangle, the leaders, the news, and the fundamental. This is the heart of the market. Boom, 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 boom. Alright? The heart of the market. If the heart stops, ladies and gentlemen, the market will collapse. The leaders, the news, and the fundamentals. Okay? Very, very important. If you have a, okay, Android software, Android, okay, tablet, or you have a smartphone, download Yahoo Finance, Google Finance, follow the news, check the fundamentals, very important. Gradually, slowly, start to develop the mindset of professional trader. This is the first step, okay? Alright? The second step is the place. Where is the price? Where is the market now? These are the questions, okay, professional asking. Recently, we are looking at the Dow 30. This is the Dow Jones, okay? Alright, you can see this Dow Jones. The professional were talking about a level 13000. Did you hear it? A level of 1300. This level here, the red one here. This is about the place. You want to know where the market is and where the market is likely to go. This is the second condition. When we are talking about the place, which is the second step of the ladder of successful trading or perfect trading style. Okay, we are talking about the place. We are talking about the support level. We are talking about the resistance level. We are talking about the trend line. Recently, I received some excellent email from some TSTWSY S008 traders that were telling me, because the gentleman was telling me that he was not drawing his trend line, which means he was in fact doing the inverse of the ladder, which I will explain to you soon, but I will not go deeply into it. Now he moved back to looking for the place. Okay, so the second step is the place. So going at least, ladies and gentlemen, whether I will say this to you now, okay, and you promise me that you'll do it. Whether you are day trading, swing trading, position trading, whatever you are doing, if you are lazy like I was before, now change. Okay, start from the weekly chart. Start drawing trend line, resistance, channels, name it, okay, on the weekly chart. Forget about the daily chart, go to the weekly chart and draw it. This is about the place. You want to know where the market, we see it for the S&P 500, I demonstrate that to you, doing week by week, drawing the line on the weekly chart, showing you what we are looking for. On the monthly chart, you see what we have done it. The same thing you want to do yourself. This is the Dow Jones, okay. Here I have the yellow line here. This is about the place. Where is the market? When we are talking about the place, we are talking about the 6 critical price levels, ladies and gentlemen. The 6 critical price levels, these are very important for those who want to buy and hold. Next week, we're going to post a very important video. We invite you to watch that video, when I will explain to traders, those who want to buy and hold, how they can use the 6 critical price level, including the small median line. You can see the yellow line here. This is the small median line, okay, for this year 2012 for the Dow Jones. That small median line is at 9879. 9879 is the yellow line here. The small median line last year is the white one here. This is the small median line for 2011. This is the white line here. This is for last year for the Dow Jones. I will show you now on the daily chart, talking about the place, the second steps in the ladder of success. On the daily chart, I want to show you something that is, pay attention carefully to the white horizontal line. Okay, this is last year's small median line. You can see last year around May and July, you can see the price came and retest this white line. This is about the place and the time. So those who are using the small median line will watch this zone carefully. The place and the time is the second condition. So the second step, okay, in the ladder, okay. So the first step is the market condition. The second step is the place, talking about support, resistance, trend line, 6 critical price level, including the small median line. Very, very important. This is about trading on the edge. This is about hot spot trading. This is about trading zones. This is the second step. So when we are talking about hot spot trading zone, when we are talking about bearish trend line, when we are talking about bullish trend line, when we are talking about trading zones, all this is about the place. This is the second step in the success of in the ladder of successful trading. So here you will watch it because you want to know the place where you want to buy, the place where you want to sell, or when you receive a signal to sell, you want to know where is the market. Alright, you see how the S&P 500 was stuck on the level of 1370 for a long, long time. On the quarterly chart, that was a very important level. You want to know the place where the market is. When the market is approaching a very important level, the market has a tendency to consolidate. Recently, traders were watching this level 13000 for the Dow Jones. Very important level. This is about the place. This is the second condition about, okay, a perfect, okay, a trading style. You can see on this daily chart, if I came to this small median line, which was the small median line of 2010. In 2010, this is in June, May, June, July, August, the price was in this region. And from there, as soon as it breaks above the consolidation zone, talking about area wave, boom, first move to the outside, break above it, try to retest it, fast, down, you see now, up. From the, this is the origin of the move, this bullish momentum, up. You see, again, price come near the 1300, you see, again, it returned back down. Where it went to the same this year, at the end of 2011. So 2010, we touch it here, the small median line of 2010. You see here, okay, again here. Alright, okay, so price come back again to retest this level here. The same white line that we retested here in 2010 price came back again to retest it here in October 2011. Okay, here again, it ran away. Same level, this movement started from, went up, same level, it came back to again. This is about the place. This is the second condition, okay, in talking about, okay, a perfect, a smart trading, okay. I will show you something else talking about the place, the second condition for perfect smart trading. So for a chart of the Dow Jones, the level we are talking about, all professional traders are watching, is 1300, talking about the place. We break above that level. The market was expecting Dow Jones to come to this level. Finally, we hit it. People took profit, went down. Now we went above it. What do you expect, ladies and gentlemen? We will expect the Dow Jones in normal condition, without any manipulation, to return back and retest this very important level. When a price breaks above a very, very important level, the price has a tendency to return back and retest that level. It's very, very important for the smart money, after the price breaks above a very important price level, that the price return back to retest it. Very, very important. The price may run far for a long, long time, but at one point the market wants to retest that level. So there is a high probability that this Dow Jones may try, I'm not saying straight away, but there's a high at one point that the market may try to retest the level of 1300. This is about, okay, the place. The third steps in perfect, okay, trading style, okay, is about timing. Majority of day traders, swing traders, are doing the inverse. They are starting from the timing, so they start from the timing and they stay on the level of timing. No, normally you should start from the market condition and then move to the place before going to the timing. But what is happening, what myself I have done for a long, long time without understanding it, okay, is that we were stuck with timing. We want to take signal. We are using trading system. We want to go on the 5-minute, on the 50-minute chart, on the hourly chart, on the daily chart. We want to enter a trade. We want to make money, okay. So we are just about timing, buy, sell, anyhow, and we are losing because we didn't do, okay, our homework, which means market condition first, the place before the timing. Now, what is happening with some of the TST traders is that they have a value trading tool which we call a trading system that works, TSTW, but instead of using it properly, which means go to the market condition first, move to the place, at least the weekly chart, which means trading on the edge of those key levels on the weekly chart, whether you are day trading. If you receive any signal, check whether you are at a hotspot trading zone. So you see the signal, so which means now you are at the bottom, you receive a signal. So traders go, they take signal. They don't want to know the place, they don't want to know the market condition, they don't want to check what Apple is doing, they don't want to check what Google is doing, they don't want to check the news, they don't want to know if the Fed is about to speak, they don't want to know when is the non-farm payroll. Some traders, I do not trade sometimes on the non-farm payroll. Last time I did not trade on the non-farm payroll, I just refused to trade. And I know a lot of professionals don't do it, but I know some traders trade on that day and they lose big time, okay, because it's just too much volatility, a messy day. And this is, I mean, I've done it myself before, but they are learning the hard way. So you want to do it properly. Market condition first, the place, and then the timing, not the inverse. But what is happening now, a lot of traders are stuck on the level of timing. They don't want to know about the market condition, they don't want to know about the place. Now, we have posted nearly 1,000 videos on YouTube. We are reaching our goal steadily. We will slow down. You will see. We will not be posting more videos as we've done very often because we have done enough. We are not going to go and divulge some of our, okay, secrets on the market. We will, okay, slow down now because we have said the most important thing that traders need to know, that to understand. That's why we are posting this video now. This is one very important level. We have revealed to traders what is the 6 critical path level. We have revealed to traders, okay, the smart media line. Next Saturday we will post one very important video and we will start slowing down big time, okay, and which means we will not be posting video every day or every week, okay, on YouTube. We will go back now, okay, to what we were doing ourselves before. We will support traders that purchase our trading system. Those who are working, those who are helping themselves, we will support them those who are struggling, hopefully over the time they will understand that they will understand few things and catch up. So we are always open. If they catch up, they contact us with support, but we will not waste time with traders that are still cutting corner. But there is a stage for every trader to go through before they understand a few things. So it's just there for everyone. So you can see here, this is about the place. The timing is about the signal, ladies and gentlemen. The timing. So you have done the market condition. You check the place where you are. Then you want now to take the signal, the entry. So talking about the timing, which is the third step. So these steps are in chronological order. So the first step first, the second step second, the third step third, not the inverse. Very important. This is about a perfect trading style. If you fail to move in this order, market condition, place, and timing, you are not trading, like a successful trader. Very important. Alright, so this is how you will do it. Talking about timing, we are talking about precision, entry point. Alright, ladies and gentlemen, you want to know, do I buy, do I sell, or do I stay out? It's three things trader will do. You want to be part, you want to sell, you want to buy, or you want to stay out. But sometimes traders forget that there are times when you want to stay out, which means it's not set up for you, you are not happy about something, or you want it to pull back and retest and set for you nicely. You don't want to rush into the trade, you don't want to lose. Alright, 5% money management rule, stop loss. Of too much volatility, it's not from payday, the Fed is about to speak, but you know that it's going to go up, but the timing, you are not happy about something, you want to stay out. So you do not buy, you do not sell, but you prefer to stay out. But there are times when things will set up for you perfectly, which means you want to buy. And you want to buy at a place. You do not just buy. You want to choose exactly where you want to buy. That's how professionals they decide where they want to buy, the best place to buy, the best place to sell. You want to buy at a value support level. You want to sell at a value resistance level. If you receive a signal to buy, you check at least on a weekly chart, is it on the edge somewhere at the key level on the weekly chart? Chances that if you are selling at a value resistance level, if the trade will be successful. Price going up, next resistance level is the next target. Answer this month straight to you for the S&P 500. Alright, so this is about a timing. All timing is also, you want to know how long you want to remain in the trade. As a day trader tell me I'm a day trader, I don't want to know about the long term. Day trading is about trading for a short period of time. You want to remain in the trade maybe 20 minutes or 5 minutes or half an hour, or a day trading can be also you want to remain in the trade for 2 hours, even more, or you want to remain in the trade for 30 minutes. It's just the timing, the length of the trade, the length of the time that you have spent during the trade is what makes it a day trading. Somebody may decide to remain in the trade for 3 days, Monday to Wednesday, just before the oil inventory, which is a very important news every Friday, every Wednesday, the oil inventory, and you close that trade and let that a new pass first, and then you roll it down, and see exactly what's going to take place after this important news every week. The oil inventory is about a precision, and a timing. Ladies and gentlemen, timing is the letter that you have to remember is letter T, which is the third step, also represent a timing. Very important. You want to get it right, If it doesn't set for you nicely, you want to stay out. If you want to sell, if you receive a signal to sell, you want to verify that the market is in a downtrend and the conditions. So you check the condition, what the leaders are doing, where the market is going. You break it down, you check the fundamental. You can't just go and sell Apple anyhow. Alright, you understand? You can't go and sell any stock anyhow. Alright, stock that pay a lot of dividend, they are very difficult to sell, because as the stock is going down, investors are buying it. They are buying and hold because they are expecting to get dividend. I was telling you now that banks will pay a lot of, more than 50 banks are allowed by the Fed to pay dividend. So do you want to sell those banks now? You're just going to lose, because investors will be buying those shares because they want to get their dividend. They are buying and hold. These are investors. So this is about timing, checking the market condition and the place before, okay, using your technical. The timing is also about using trading system. I was explaining to traders, if you are using a trading system, you need to be disciplined. You are using the trading system day in, day out, the same trading system. Do not miss it. What has happened to me was very strange, ladies and gentlemen. When I started trading first, I had one trading method that I used, using MACD and stochastic. That's what created the website www.stochasticmoney.com. I make money some days and I give everything back. But I was making money. Then something happened. I start what I call the exploration, trying different trading systems. I lost big time when I start mixing systems after mixing them together, trying all sorts of different trading methods. I lose non-stop, ladies and gentlemen. When you have a trading system, you must understand the tool and use it day in and day out. Being disciplined, following the rule of the trading system, and then becoming a master of the trading system, which means you own the trading system. Alright? This is about, okay, the timing. Very, very important. So to summarize quickly for you, a perfect trading style is about, okay, a trader that will always check the market condition first, which means the trading triangle, the fundamental, the leaders, the news, the sector, okay. And the second thing about the trading style is about knowing the place, support, resistance, trend line on the higher time frame before the signal time frame and the entry time frame. The place is very important. The third step is about timing. This is about the signal. This is about the trading system. This is about entry. This is also about deciding what do you want to trade or what do you want to invest in. Do you want to invest in the retail sector? Do you want to invest in the banking sector, financial sector? Do you want to buy a commodity? You want to decide what you want to trade. Okay, some stock are not worthy even to place a trade in. You may decide to stay out. Okay. Well, when you know that a stock has a high volume, okay, you can trade them for day trading. But some day traders are trading anything, so you want to be very selective. Timing is also about what you want to trade, okay, and also understanding the characteristic of that financial instrument, okay. Ladies and gentlemen, I hope I have said enough so far about perfect trading style, that you have understood everything that I have said so far, that you will put into practice, okay, in order, to make a better trading decision. All right. If you have any question, please feel free, to send them in, and we will surely, get back to you. Thank you for watching, and we will speak to you very soon. We are the TSTW 24 traders.